Alright, so let's start this session here today. Let's start off with the review first, okay? So last week we have a really nice expansion and it was within the Q3 of the month. So heading into next month, what I'm expecting is some sort of a retracement. As you can see for ES, we did not have any up close candles on the way down, and every day we were just making new lows, taking out the previous lows. Similar for Nasdaq, but the difference between Nasdaq and ES is that Nasdaq has this green up close candle on Tuesday. All right. Nothing really much. After all, I'm still looking for this low to be traded to for ES. Now, if you take a look at the higher time frames, the projection levels here are pretty accurate. Both indices made the expansion all the way to the -4 to 4.5. This is typically your reversal zones, and then we got this huge displacement lower, right? This is a really huge weekly candle as compared to the past many weeks, right, of candles here, right? This is the biggest candle. So moving forward, what I'm anticipating is that price is going to take out this low right here, basically Q1's low for Nasdaq and for ES, right? Because for reversals or even retracements, when price has reached its maximum expansion, it usually retraces back into 50% of the range, and it's going to aim for the nearest liquidity that is near to that equilibrium. So right here, obviously, we have this swing low for ES and this swing low for NQ. Where do I anchor the fibs, right? It's basically the 3 months candle. So I anchored the fib from this low to this opening price, because to me this is the manipulation of this entire expansion, right? Up close, similar, up close, and this was the down close candle here. So manipulation into this fair value gap and then higher prices. Therefore, I am using this wick here as the last manipulation before this expansion. That's how I derived the projections from. And the dealing range would be this low to this high for NQ, and obviously this low and to this high for ES. Now we do have this fair value gap here on the 3 months chart, ES and NQ. All right, this could be the most likely draw on liquidity in this quarter. It lines up perfectly with this swing low here and this swing low here, right? So everything is in place, everything is syncing up very nicely. And if you take a look at the dollar is bullish, right? So because dollar is bullish, right, it can be confirmed when this up close candle closed above this down close candle here, because this down close candle was the candle that ran out the liquidity on the rejection blocks. Okay, that's how I gauge the bullish price action. And on the higher time frames, dollar is bullish. Therefore, if the lower time frames lines up with the higher time frame, then we're going to get a high probability expansion, right? So because I'm bullish on the dollar, naturally the indices is going to perform inversely, right? Which is why for the next, for this quarter here, basically the next 2 months from now, I believe this is the draw on liquidity. Now, if it is to continue higher, this fair value gap should hold, and this will be the invalidation. So far, we don't really have S&Ps on the highs. If we were to use all the indices to confirm that, okay? So as you can see, let me remove this. We don't really have any clear SMTs among the 3 indices. However, we do have a lower time frame SMT on the monthly, right? Because if you take a look at this candle here, ES and Dow Jones took out this previous quarter's high, but NQ did not. So this is a lower time frame SMT, but if you were to say low, it's not that low, right? It's on a daily chart and on a weekly chart as well. So technically, if you're an intraday trader, this SMT is enough to give you a reversal like what we had last week. Right, so with that said, I'm going to move on to the daily time frame for the individual indices, right? Basically ES and NQ here. Now initially I was only looking at this level from this low to January's opening price, and obviously it lines up nicely as well, but I was using this as the current dealing range. So my low hanging fruit objective would be this low right here. You notice that we did not take out this low last week. So next week, this will be my weekly objective. And if it is a weekly objective to the downside, I would first anticipate a move higher above the weekly opening price. Pretty simple here, right? So what is the nearest P array that I can find on the chart that can allow me to look for short entries into this low, or maybe even this low right here? Right, to me, let's take a look at the weekly chart first. I don't have any levels here, right? To be completely honest with you, I don't have any key levels, levels that I can key off from, or PD arrays that I can key off from on the weekly. I don't see any. So I'm going to move down into the daily, right? I'm showing you the process. Okay, so we do have this fair value gap right here. This is the first PD array that jumps right out into my eyes jump right to this PD array here. So this one fair value gap here, and we have this inversion fair value gap here, right? Because this fair value gap was utilized before to send the price higher above this swing high here and above this swing high here. So this is to me, it's a inverse fair value gap, or if you want to call it balanced price range, that works as well, right? But over here, if I really want to squint my eyes, right, I can see an implied fair value gap right here. Okay. Now, if you do not know what is an implied fair value gap, it is basically when you have one candle taking out a certain swing low and closing below that swing low. So we have these two swing lows down here. I'm going to use the lowest, no, I'm going to use the nearest low. And if you take a look at this candle here, it has closed below this swing low. Okay. Now, when you have this candle close below the swing low, obviously you will be looking for fair value gaps on the left and right, to see if there's any fair value gap. But because there wasn't any fair value gap, the next thing that you can look for is implied fair value gap. So implied fair value gap meaning the left side of this particular candle is a wick, and on the right side of this candle right here, the body did not close within the wick. Okay, and instead we got another wick. So on the left and right, overlapping the majority of this candle's body is the wicks. So I'm going to use the 50% of the wicks to my left and 50% of the wick to my right, and both of that will give me this fair value gap right here. So this is what I call, or maybe not what I, but what ICT calls implied fair value gap. Okay. The only problem with this fair value gap is that we don't have any up close candles to the left of it. Alright, so this is an issue here. So what I really have to do is just to wait to see what price presents. What price present, right? And what price is basically going to do. So basically, in general, I only can rely on my order flow analysis, because there's not an obvious key level that I can key off from, or there's no obvious PD arrays that I can key off from to go short, right? So for next week, we do have Tuesday, Thursday, and Friday. Those 3 days we have high impact news. On Tuesday is 9:45, Thursday and Friday is 8:30 and 10 o'clock. So my focus will be from Tuesday to Friday, and I would be expecting Monday to be consolidation. Why would I anticipate Monday to be consolidation? Is because we have a large range day on Friday, right? Look at this candle here. Okay, if you take a look at the previous week, on Monday we have expansion, Tuesday consolidation, Wednesday expansion, Thursday consolidation, Friday expansion. So consolidation always leads to expansion, expansion always leads to consolidation. That is basic ICT stuff, right? So I'm expecting Monday to be accumulation, so I am going to skip trading on Monday. Okay, unless Monday takes out Friday's low, because I think that if Monday is able to take out Friday's low, we might have a retracement trade on the lower time frames, but that is very unlikely, in my opinion. Okay, low probability. It's probably going to accumulate and engineer both sides of the liquidity for Tuesday, because Tuesday we have in high impact news to attack, and then after it attacks one side, it's going to reach the other side. So basically, if you want to call it, seek and destroy profile. Okay, now We are heading into the 4th week of April, so I'm not having huge expectations, especially after this expansion here, right? To me, the highest probability on the higher time frames would be to wait for next month's opening price, right? If you study Trader Day's material, you will know that April opening is the true open of the year. So if it is the true open of the year, and we are bullish, we should not see price stay below April's opening price for very long, right? So time is crucial right here. What we did right now, or what we have right now, is that it did not stay above the April's opening price for very long, right? So we had the opposite. On the higher time frames, yes, I am bullish, but the fact that it has chose to do something like this, right? So it chose to attack a high after April's open, and then we got this strong retracement, right? This is concerning in terms of the higher time frame bias, right? But I'm not worried about it because it does not matter to me. What matters is that you get the correct bias on the lower time frames, right? Because on the lower time frames, if you're trading intraday, you can trade both directions. You just have to be right on the current order flow of the lower time frames, so basically daily and below, right? So you're using the daily to gauge your bias, right? And if you have noticed, and if you have been watching my live streams, the trades that I took for this week itself is mostly longs. Right, so I was playing against the higher time frame order flow, right? So you can do that, but you can't expect your terminus to be met with precision. So there were 2 days, I think it was Wednesday and Thursday, right? Price did not reach up into my terminus, my initial analysis terminus. It only reached up into my low-hanging fruit objectives. So it is very important to note that as well, because that's what you get when you play on the higher time frames. I mean, when you play against the higher time frame. Okay, so now let's take a look at NQ. Let's start off from the monthly. On the higher time frames, NQ made a lower high. So technically speaking, NQ it's way more bearish than ES. Okay, it has traded below into this monthly fair value gap here, but to me this is just one of the first few targets. I believe we are going to reach into this fair value gap right here, because as I said, there is a quarterly fair value gap right there as well. On the weekly chart, NQ has closed below this fair value gap's consequent encroachment. This indicates bearish prices, so I do not expect this order block to hold. Okay, this order block should not hold. So what I'm gonna look for next week would be some form of retracements into this down close candle here, right? So for NQ it's clearer than ES, but I'm gonna look for a retracement into this order block in order for me to go short if I'm to hold a swing trade, like a one shot, one kill, taking out the weekly range, like what I did for ES last week. So if I were to do that, I will have to utilize this down close candle here. So why this down close candle? This down close candle was used to send the price higher. Right, if you take a look at the high to the opening price, look at the candles here. Okay, it was used to take out this high. So if it breaks lower, this becomes a breaker. On the daily time frame, it becomes a little bit clearer, right? But not very clear, because if you are just starting off ICT, or if you're new to ICT, you may use this as the breaker instead. But I don't think we are going to trade up into this breaker, and if we do, to me this will look more like a reversal back up to higher prices, right? If we do trade back into this down close candle here. Okay, so within this weekly down close candle, right, from the low to the closing price, on the daily we do have this fair value gap right here. So to me, I think this fair value gap is a high probability fair value gap that if it can retrace into this fair value gap, I would love to take a short down into this fair value gap right here. So for NQ, this will be my next week's objective. If it is to continue to expand lower. Make sense? Next week could just be consolidation, seek and destroy, right? I can't tell right now. I can only tell you if it is going to be seek and destroy by the end of Tuesday. Okay, so if it is going to continue to expand, this would be my target right here. Okay, now with this information, what can I do, or what can I use it for, right? So I'm gonna wait for the opening price for next week, and if price opens within this candle, I'm pretty sure it will, right? But I can't guarantee anything because things might happen over the weekends, you might not know. Therefore, if it opens within this candle here, I'm expecting next week's candle to take out Friday's high. And once it takes out Friday's high, I will be looking for a change in the state of delivery on maybe the 4 hours or the 1 hour time frame, and I'll frame my trades using that time frame, and I'm gonna go down even lower to refine my entries, of course, right? So for Nasdaq, it's much clearer than ES, right? Let me just double check on ES, right, just to be fair. Right, there's no down close candle here for ES for me to utilize. There is no swing lows as well, so it's kind of difficult, right? At most, what can I do is maybe this order block here, but I mean to me this is like, it's not a clear PD array. You can use that, but it's not the clearest PD array, right? It does not click immediately, you know, as compared to NQ. Okay, so I'm gonna use NQ. And how would I validate the strength of NQ wanting to go lower, right? The strength of bearishness. I will use this swing low right here. So if I am bearish, I do not want to see next week's candle close above the 50% of this wick right here, this discount wick. Okay, WICK, right? And when you have the wick drawn, it lines up perfectly with this daily fair value gap right here. So I think this daily fair value gap is a strong candidate for a short entry. But obviously, due to market structure, I cannot short it blindly, right? Because we don't have any swing highs around here. The last swing high is up here, so we are way below that swing high. And if you're going to short here, you're going to have a large stop loss. That is not what I want, or that is not what I am trading, right? I mean, it's not my trade model, and it's not the kind of setups that I would take. Okay, and yeah, basically I think NQ would be better next week, right? Because this week the better price action was obviously ES. Okay, so let's see next week if we get a better price action for NQ. Okay, now that is basically it for the weekly forecast for indices futures. And with this, I hope you enjoyed this session here. And let's see if I have any last thoughts before I end the session here. Let's see. Now if we somehow close below, close the year below this up close candle here, this is super bearish. Okay, if we somehow do that, we're going to be in for a ride. Okay, now why would I be even considering this is because of the cycles, right? So let's just say hypothetically, or assuming trader day, right? It's correct that we are in the final cycle of the 80 years, right? So I'm not sure what's that word again, and basically we're in winter season. So during winter season of that cycle itself, basically the last cycle, Q4, we are going to anticipate some sort of a reset before we start the next 80-year cycle. Okay, so if that is to happen, and if trader day is correct, and if we do close the candle, this yearly candle, below this year's candle, we're really going to trade very, very low at a very, very fast speed. Okay, that's just my thoughts, and that's just what the charts are telling me. Okay, because the fact that we have traded way above the yearly opening price right at the start of Q1. Okay, and then Q2 we took out Q1's high. So to me, that is like a manipulation. Correct? So let's see if it pans out, right? Let's take a look at the bullish years for reference. Okay, right, for example, this year right here. Let's see. Okay, let's go down into the monthly chart. This is year 2023. We only have a short wick below, and then as you can see, in the month of April, we were right here. We're trading into a bullish on the block. Okay, in the year 2021, we traded lower first and then higher in Q1. Yes, April opening is right here. We did not even have a down close. I mean, we did not even have a wick on the below true open. Okay, let's take a look right here. We traded lower. Yep. So this is something. I mean, this is just one example here, right? So if you're bullish for the year, you basically want Q1 or Q2 to trade below the previous year's low and then higher, right? And the bigger the manipulation, the bigger the expansion, correct? Another example would be this right here. Yearly opened below, taking out the previous year's low, and then we trade higher, right? So if you were to use the charts, it's basically something like this, right? The low to the yearly open. Right, I mean, like if you measure it like this, then we might want to trade higher first, correct? Because we have missed the -2 mark right here. Okay. Yep. Therefore, I'm still leaning bullish. I'm not trying to say that we are going to be bearish right now this year, but I'm still leaning bullish for this year. As I've told you, my invalidation is this swing low right here, and I'm expecting a continuation higher, right? So just basing off the last SMT and the last swing low, the projections are like this. Okay, so usually if you're using projections, when price trades into 1 to 1.5, somehow or other it's going to reverse into OTE. Let's see if we get that, if we got that right on the higher time frame chart. Right, so we did not, but we did retrace into almost 50% right here before higher prices. Okay, all right, the problem here is that we have not reached into -2. So if it comes back down into the 1 to 1.5, we are going to trade higher basically, and the next objective would be new all-time highs here and here, and probably right here. I think if we're able to get right here by the end of this year, the next year we're gonna have a really nice reversal, right? So let's see if we get there this year for ES. All right, let's take a look at NQ. This is interesting. Now you guys can see the last SMT was here during 2022, and if you know, you know, right, what happened during that year. Now let's see projections. Now for NQ, it's slightly different because NQ has already reached its maximum expansion right here. So this is very problematic here. It's not something that I like. But anyways, let's see. Okay, let's see how this plays out. I mean, you don't have to be right on the higher time frames because you have ample time on the lower time frames to change your bias accordingly, right? It's not just going to give you like a flash crash, right? Even if it does, you're going to have time to enter. Let's say, for example, in the year, let's say, for example, in this flash crash here in the year 20,000, right? So you do have this fair value gap right here that you could have utilized for this run lower, right, all-time lows, I mean based on the chart, right? And you have even more fair value gaps that you can capture the move, right? So you're not going to miss anything here. And let's just say 2008, the financial crisis or some shit, right? You have this fair value gap as well. So I believe we're not going to miss anything, basically, right? I'm interested in Dow Jones actually, because the Dow Jones has more history data. Let's take a look. Down it. Weird. It's still, maybe this is the futures, but it's okay. It's the same actually. Right, let's see for ES if we do get that chance to enter the mega crash, right? I mean, there's always a chance, right, on the monthly chart. So for ES, let's just say right here, this is a very good example of an implied fair value gap. Okay, so we took out the swing low right here. We only got this wick. Oops. We got this wick right here. And we got this wick on the left. Let me just make this slightly clearer because I only want the consequent encroachment. Right, so if you look closely at the candle's body, this is your implied fair value gap when price took out this low here on a closing basis. Right, so this candle was the one that closed below this swing low that made the higher high, the highest high. Okay, and then the months closed like this. Basically, this is an implied fair value gap. And you look at the months here, it's basically yearly opens, power of 3, smashed it down. So right here we do have like a small fair value gap, right? If you can see it, I'm going to change the colors obviously, so just hold on a minute here. Right, yeah, we have this small little fair value gap that is above April's opening price, so you have a very nice confluence running lower. So this is the 2000 crash. Let's take a look at 2008 crash. Right here as well, we do have this. We have this candle closing below this swing low that made the highest high at that point in time. And look at this fair value gap right here. Wow, this is perfect. And then it just crashed. This is your first entry and your technically your first distribution. And this is what ICT calls the second distribution. Right, so the second distribution is usually the fastest and without much retracements, right? Yeah, I think this is it. So yeah, I think overall we don't have to worry that we won't catch the crash. So right, I think that's about it. I don't want to go too deep into that for this video here, right? And with this, I'm going to end the session. I hope you enjoyed it, right? Have a great weekend. Good luck trading next week. I'll see you again and I'll talk to you again, right? Take care.